My name is Bruce Wojack, and I am the current chair of the Oak Park River Forest Community Foundation. And I'd like to take just a couple minutes to thank you all for attending today's meeting. But more importantly, thank you for your generosity during 2021 and the years that came before that and the years that will come after 2021. So we just thank you for being great partners to the foundation. And I'd also like to extend that thank you on behalf of our president, Tony Martinez, and his very capable staff and the other members of the board. Before we get started, I'm gonna just walk through a couple housekeeping items. So as you may have seen, the meeting is being recorded. So if you wanna view it later, we can certainly send you a link to the recording and it'll be available to all fund holders via email. On Friday. Carrie Sumney of our staff can help coordinate that. During the conversation, we want to definitely have a dialogue with all of you, but in order to kind of get through the information that we feel is important for you to hear, we kindly request that you remain on mute during the call. And if you, at this point, I think everybody's comfortable with Zoom. There is a chat function. So if you do have a question or comment, you can certainly utilize the chat function that will be monitored by another staff member, Ann Sullivan. And then we will have a more formal Q&A at the end of the presentation. For viewing purposes, we found the best way to view this is using the speaker view, which you can find in the upper right-hand corner as an option within your Zoom screen. So that is the housekeeping items. We can move on, Carrie. Just a brief overview of our agenda. Tony will give us a foundation update, and then our investment overview will be led by our investment committee chair, Wendell Rayburn, and then the other members of the investment committee, Wendell, myself, Jon Hale, Ross, and Tony will be available to take your questions regarding our fund review and our investment approach. We've obviously we all are. I mean, I look at the list of people on this call, and most of you are very involved with the success in our philanthropic community within Oak Park River Forest and surrounding communities. But just to take a second, I would like to recognize our board of directors and our staff. One of the comments I would make is for an organization that does as much as we do, we are very mean and lean from a staff standpoint. So we've got Tony as the president, Cheryl Martin, whom many of you know, as our CFO, Elizabeth Chadry, who's in charge of our programs, Carrie, who's one of our philanthropic advisors, and who works on grants and donor services, and then Kathy, who works pretty much on everything else. So pretty lean staff, and we're trying to keep it that way to have more dollars go to the missions and causes that are important to you and important to the community. So with that, I'd like to turn it over to Tony to provide a foundation update.
Thank you, Bruce. I want to acknowledge Bruce and the other members of the board for their amazing and dedicated leadership over the years. I also want to acknowledge our foundation staff. I am so grateful to each of you for your heartfelt commitment to making our community better through the work that you do each and every day. Over the course of the past 2 years, the Oak Park River Forest Community Foundation has remained steadfast in responding to the needs of today, hand in hand with an eye towards the future. We have taken a hard and honest look at philanthropy and its ability to address systemic racial inequities. We understand that our work, from grant making to our investment portfolio to how we operate overall, must intentionally and comprehensively address the racial disparities that exist so that all members of our community thrive and prosper. This journey has led the foundation to evaluate and assess its policies, practices, and work. Our mission is now focused on uniting community members and mobilizing resources to advance a racially just society and equitable outcomes for residents of Oak Park, River Forest, and surrounding communities. Through strategic investments, deep partnerships, leadership, and advocacy, we are redoubling our efforts to make sure that we are doing our best to ensure everyone has the opportunity they deserve to live a fulfilling life. This starts with listening and learning and building trust within our community to deeply and fully understand the many barriers and disparities that exist here in our region. Over the past several months, the foundation has met with many community members throughout West Cook County to learn more about the challenges we face and opportunities to help each other. The results will be summarized in a community needs assessment to be published in the coming months. It has been a thoughtful and purposeful process to get us to this point. In front of you is a chart that shows part of our journey. Our board and staff went through 5 intensive progressive workshops led by Rashida Graham Washington and Terry Kelleher, established leaders in race equity work. We gained greater awareness and understanding of our shared racial history and its implications on social, societal, systemic systems today. This training has given us a solid foundation to build positive change for bettering our community. The training also helped us in enhancing our vision and mission for the future. Embracing a new direction starts with the shared belief our organization thoughtfully and intentionally reviewed its core values, mission, and vision to align with what we hope to achieve: a racially just society in which all members of our community thrive and prosper. And we recognize that each of us have a significant role to play to be accountable to one another to make this vision a reality. To help us on our journey, we hired Nova, a women-owned, Black-owned consulting firm providing diversity and equity and inclusion training, research, and data analysis. Passionate and knowledgeable, they have the expertise to navigate and interpret the nuances of conversations to build the necessary bridges that will inform and enhance our work. Over the past 4 months, we have met with 100 community members to listen to their needs and concerns. Groups focus keenly on the people with lived experiences who have not historically been invited to such conversations. And also included were community leaders and frontline staff from grassroots organizations serving our community at large. By strengthening our trust with these individuals and groups, we'll be able to go beyond what we've heard, increase community engagement in the process, and put resources into action. Before I turn it over to our Investment Committee Chair, Wendell Rayburn, I want to express my sincere gratitude to each of you. All of us, in our own way, make our community better, whether through your work, volunteerism, engagement. Each of us have a significant role in the vibrancy of our community. On behalf of the Oak Park River Forest Community Foundation and the nonprofits that we serve and everyone in our community, thank you, and we look forward to building on our relationship with you for years to come. I will now turn it over to Wendell. Thanks.
Tony, thank you very much. I appreciate it. Again, by way of introduction, I am Wendell Rayburn. I've served on the board of the Oak Park and River Forest Community Foundation for a little over 6 years. I am the investment committee chair, and I also serve on the finance committee. Before moving forward to our agenda and the rest of the slides, I did want to acknowledge my fellow investment committee members who serve with me. Ross Fasano, as you can see, a long and distinguished career, now retired from U.S. Trust. Bruce Wojack, Bruce, obviously our board chair and at Northern Trust. My colleague, Jon Hale. Jon is the Director of Sustainability Research here at Morningstar and also recognized by Barron's Magazine as one of the top 20 influencers in ESG. And my day job, again, I work at Morningstar and I manage our institutional equity research sales team. So between the 4 pictures on this screen, we have about 120 years of experience in financial services between the 4 of us. And also a big thank you to Tony and Cheryl for the work they do. If you all know Cheryl, nothing gets done around here without her, so we appreciate her work. And finally, a big shout out and a big thank you and a big acknowledgement and recognition to Chris Pirame, our relationship manager at U.S. Bank, and also Matt Rass. Matt is the senior portfolio and is responsible for the investments in our fund, and they are at the U.S. Bank Charitable Services Group. So moving on to the rest of the agenda, we're going to preview, I'm going to show you a few slides here. We've got our assets under management and how they've grown. We have our investments at work. I'll spend a little bit more time on that slide to talk about the mechanics of the investments and the distributions. Talk about our investment philosophy, which is pretty important. We'll look at the portfolio allocation. We will visit a slide that has our investment highlights from last year, and we'll look at the returns, and then finally a few bullet points on our outlook for this year. Carrie, next slide, please. Now this,
right. I mean, all you gotta do is like look at the.
This slide illustrates the growth of our assets under management, and it's a nice orderly stair step up and to the right, which is what we like to see. From a dollar standpoint, we've realized an increase of just over $21 million, or a 63% increase in our assets under management. To be clear, this is a combination of contributions and investment performance. But again, to our partners at US Bank, the majority of this increase is through investment performance. So again, great job by them. I'll spend a few minutes on this slide. I want to walk you through this equation of how your investments and your philanthropy work. Starting with, we'll start with January 1, year one, if folks that partner with the Community Foundation. If you make an investment, January 1, year one, of $100,000, and this next box, this mustard colored box, is the biggest variable. We look at our returns. We have the ability to look at the returns on a daily basis, weekly, quarterly, and yearly. But we close out the year, and December 31st of year one, we will see what the investment returns are. And in this case, again, for illustrative purposes, we've used 9%. So you add the 9% or the 9,000 to your beginning balance, and at the end, again, December 31, the end of year one, we have a balance of 109,000. Now for our endowment, we do a 4.25% distribution, and those are the funds that are used to, that we pay out in the form of grants and to various nonprofits and community-based organizations, again, to do the good work through your generosity. So that, in this case, if you do the math, that comes to $4,633 from a distribution standpoint. The balance from the investment returns totals $4,367 in this case, and that is then added to the $100,000. So we will take that number in that red box, that total 104,367. Beginning of year two, January 1, it's populated in that orange box on the right, and then we will start the process all over again in perpetuity. So a fairly straightforward equation of how your investments work, and how your generosity and your philanthropy is going to work in the community. This also is a pretty important slide. We want to spend time talking about our investment philosophy. It's very, very important to us that we underscore the fact that we are stewards of your capital, that you have entrusted with us. And it all starts with this first bullet point, which is the IPS, or the investment policy statement. This is a document that our partners at US Bank and I and the investment team review once a year. This document states exactly how our assets can be invested. And it also stipulates the range from an asset allocation model standpoint. So the pie chart, historically, bigger picture, our investments in the equities, on the equity side, have been 60 to 65% equity exposure. And on the fixed income side, 35 to 40% in fixed income. This is definitely a marathon, not a sprint. Again, we want these funds to work in perpetuity. So it's definitely a marathon, and we're always looking at the bigger picture and always looking longer term. At next bullet point, we talk about diversification by holdings. When we think about diversification, we're thinking stocks, small cap, mid cap, large cap, growth, GARP, which is growth at a reasonable price, value, international, domestic, and emerging market investments. To be clear, we don't own individual stocks, but we own funds, ETFs. mutual funds and index funds that own these individual names that are managed by US Bank. On the fixed income side, we hold the funds that hold government bonds, corporate bonds, and investments in high yield. So again, a combination of mutual funds, ETFs, and index funds. Carrie, next slide, please. Talk about portfolio allocation. There's an old saying in the investment business, if you want to get rich, concentrate or own a concentrated portfolio. If you want to stay rich, diversify. And we are all about diversifying. So this is an illustration of a breakdown of the allocation of our investments between equity and fixed income. It's a little dated, obviously. It is at the as of the end of 2021, because obviously we're not the first quarter yet. But bigger picture, you can see how diversified we are in equities, international and domestic, fixed income, as well as money market funds. So again, it's a combination of actively managed mutual funds, ETFs, and index funds. The other thing we wanted to illustrate here is, and we'll talk a little bit more about ESG, but we wanted to show you our ESG exposure and focused on funds or investing in funds with an ESG focus or mandate. So of our domestic equity exposure, at almost 40%, 16% is invested in funds with an ESG mandate. It's even higher for on the international equity exposure. And then about a third of our fixed income exposure is focused on funds with an ESG mandate. Next slide, please, Carrie. A little bit on the highlights. It was, again, another year of pretty strong performance with a backdrop of a low interest rate environment. You can see the returns there. Our 1-year return is just over 9.5%, along with the 3, the 5, and the 10-year returns. If we go down to the next bullet point on the market drivers, again, low rates really push the investment community to seek higher returns and what people would suggest are risk or riskier asset classes, i.e. stocks. And again, a low interest rate environment to get the economy stimulated and growing after 2 years of COVID, that provided the tailwind for equities, and that's what boosted the equities markets. Second bullet point, we saw a larger part of the population get vaccinated. And we also, the pharmaceutical companies came up with devised the booster shot. So we saw a larger portion of the population vaccinated. We did have some fits and starts last year with the Delta variant and the Omicron variant. But by and large, once a larger part of the geography got vaccinated, that led to things opening up, restaurants opening, stores opening, and it led to a higher consumer confidence. Folks went out and spent money. So it was all positive. That last bullet point, or I'm sorry, the third bullet point, we also had pretty solid, robust corporate earnings, and generally, given the low rate environment, companies were able to borrow cheaply and expand their business operations, and that led to solid earnings and again, helped buoy the market. The last bullet point here is we made a shift and initiated positions in funds with an ESG mandate or an ESG focus, which is totally aligned with the foundation's vision and mission. And as you saw from the earlier slide, you could see our exposure, our allocation to ESG funds. Carrie, next slide, please. So the top of this chart, the orange part, shows our performance versus our peer group. And as you can see, again, attributing to Matt's performance, very strong investment performance in the 1, 3, 5, and 10 years. In fact, we are higher than our peer average. And that's, again, a credit to our partners at US Bank. The second bullet point, really what this tells me and should tell everyone is when we talk about our equity allocation with our peer group being in line, but a higher fixed income and a lower alternatives allocation, that really says to me solid performance with a moderate amount of risk. Typically, when you talk about alternatives or alternative investments, by definition, They're a little bit higher risk, but also higher return. And again, US Bank has been able to really keep our equity allocation in line and our what we call risk mitigating, which is fixed income in line and really, really low from an alternative standpoint. So again, a great job managing the portfolio with a minimal amount of risk. And that last bullet point, again, a lot of interest in ESG. We are looking through all of our investments through an ESG and DEI lens. And we've really put a big emphasis on that over the past year. Our outlook as it relates to the first bullet point, we are keeping an eye on the Federal Reserve as we anticipate a rate hike, our first rate hike in a few years that's going to come in March, so next month. The big question mark is how much. It's going to be 25 basis points or 50 basis points. The reason for this is to combat inflation. And in my opinion, inflation right now is the biggest threat to the economy. A quick side story for you. And I'm sure you've seen it. There's been a semiconductor chip shortage. You can't buy a used car. New cars are hard to come by. Energy prices are going up. Groceries, prices of raw materials. In January, we saw a CPI or Consumer Price Index rate. It's about 7.5%. It's the highest in 40 years. So everything is costing more. And the quick story I wanted to tell you was in a little over a year ago, in January of 2021, we bought a used car, a Nissan Rogue. It cost $18,000. It had 28,000 miles on it. We gave it to our daughter, our youngest, who's a senior in college, to take back to school. Unfortunately, she was not in the car, but a drunk driver hit the car while it was parked one night, totaled the car. So to give you an indication of how the premium in the used car market, we paid $18,000 for this car about 14 months ago. The insurance company literally sent me a check for $27,500. The flip side of that is I'll probably have to go spend 30 plus to get another used car. So, and I'm sure you see this, so the prices of everything are going up. So again, inflation is the biggest risk we're facing right now. The second bullet point, again, high rates transfer, higher interest rates translate into a more muted economic growth, and that's going to impact corporate earnings. So those we expect to be muted as well. And then finally, this last bullet point illustrates our partners at US Bank, how they have positioned the portfolio to a more neutral stance. It's definitely the right thing to do, given the fact that in January the market is already coming off. They've increased our cash position a bit, because if you look at the market now, stocks are on sale, quite frankly, securities are on sale. There are going to be other factors that influence this, like the Russia-Ukraine conflict. That's going to push energy prices higher. Gold prices and precious metals prices will probably be higher, and continued rate hikes down the road, just to the extent of, is it 25 basis points per meeting or 50 basis points a meeting. So to sum it up, I would say that for this year, for the balance of the year, we're going to see an increase in interest rates to curb inflation, and to slow the economy down that has kind of gotten out of the shooting off to a fast start a year and a half, a couple of years ago. And again, we expect the returns this year to be more muted than in past years. So, Carrie, if you just go to the next slide, that concludes my prepared remarks. We thank everyone for attending. We really appreciate you entrusting us with your philanthropy and your generosity. And I do believe we are going to take questions now. And I think Bruce mentioned that if you would put those in the chat, I think Carrie and Ann are monitoring the chat to take any questions that you might have. Thank you very much again.
I think the first question I have is, who's your insurance agent?
All day, USAA. I was shocked. I said, does it matter how much we paid for the car? And they said, no, this is a check we're going to give you. I said, okay. Oh, and by the way, True story. I told my wife I was going to go out and wreck our other car.
Yeah.
She said, don't do that.
Wendell, we have a question from Barbara Best, who's one of our women leaders, and she wants to know if the investment policy statement allows investments in alternative investments.
Yes, thank you for the good question. It does allow for that. Now, when we talk about alternatives, we also, real estate or commodities or hedge funds are in that bucket as well. So it does allow for that. We, on the investment committee, we have we have conversations on a quarterly basis about these. And if Matt sees anything out of the ordinary or any opportunities, then he will bring those to our attention. But that investment policy statement does allow for that.
Thank you. We also have a question from Doug Dixon. He wants to know if the new positions in the ESG investments are more or less volatile than the general market, or is that something that you can predict?
I could probably answer that, but I would defer to Jon if he's out there. Jon Hale.
Yeah, I'm here. Yeah, it's an interesting question. I mean, the ESG investments can really be something that is applied to any asset class or sub-asset class. So they don't need to be more or less volatile necessarily than the market at large. When we were in the process of finding ESG alternatives to the conventional funds in the portfolio, we were careful to keep that in mind, that we wanted a very similar risk adjusted return profile for the ESG fund that was replacing a more conventional fund. So as we shift towards ESG, we're looking at doing that in a way that does not increase or even significantly reduce risk in the overall portfolio.
And if I could, I think Barbara, thank you.
Yeah, Barbara added on to her question.
Right.
Couple of
So
questions.
yeah, good question. So I don't have the IPS in front of me on as far as the ranges and how much. We don't have any investment in private equity. From what I know about private equity, it's your money is locked up for an extended period of time. So there is that period. It doesn't say we can or won't look into it, but traditionally our investments are, and also, if you're investing in private equity, much like you are with a fund manager, they're like, from investing in private companies, I wouldn't know enough to open that portfolio and dig deep down and really understand, from an investment standpoint, what are we doing? How long does this lock up? There are a lot of other factors that go into that. It's been wildly successful, and the returns are pretty solid. As a matter of fact, that's where there's a lot of money out there, and it has been going into private equity. So I don't have the number in front of me on a range. But no, we don't have any investments in private equity.
I would add, this is Bruce, I would add that we also look at that from time to time. We did a review probably in late 2020, and there may be a time when alternatives or private equity in particular does have a role in the portfolio. What maybe had us put that on pause for a bit was we are stewards of everyone's funds, and although the returns can be significant, the fees related to private equity or any alternative kind of strategy is usually a little bit more expensive. And so I think that was one of the things that gave us some pause at that point, even though the returns potentially could be increase the returns of the portfolio. So I think we're open to it, and we will continue to review it from time to time. We just haven't pulled that trigger at this point.
Okay, I think we have one additional question about ESG as well. Just maybe some more details about how we actually do screening of the funds that we incorporate that have the ESG components. Meaning, is there any of the environmental social governance, is there anything that we're more concentrated in or concerned about in our screening process due to the foundation's new mission and vision?
Yeah, so it's a great question. I think that the best way to think about it is to think of ESG investing as a way for the foundation to better align its investments with its mission. ESG investing is not activism per se. It is investing designed to generate the expected risk-adjusted returns that we require as a foundation to meet our funding requirements and goals for long-term capital appreciation. But in addition, ESG investing, broadly speaking, is about identifying and investing in companies that care about and are taking action on major issues that are affecting both their business and the world, like climate change, like diversity, equity, and inclusion, paying living wages. The list goes on. And it's also about, and this is, I think, something that is, definitely worth knowing, but not as widely known. It's also about engaging with companies as shareholders to encourage them to move forward on key ESG or broadly sustainability issues. And this is having a major impact. And so by putting our dollars, like Wendell said, we don't own any stocks directly, but by putting more of our dollars into funds that own stocks that are ESG oriented, where you're sort of collectively putting money behind this effort. ESG investors then in this coming year, it's a proxy season, so-called, is about to start, where companies hold their annual general meetings. And ESG investors have proposed about 500 shareholder resolutions at U.S. companies this year, including about 100 that are related to diversity, equity, and inclusion and racial justice. So that, to address your part of your initial question, is that's really what we would like to, if possible, focus our ESG investments around, our funds that are going to, support these kinds of issues when it comes time to engage with companies and vote proxies. This year alone, there are requests at 27 major corporations in the U.S. to asking them to conduct racial equity audits. There's proposals at another 20 or so for just simply greater disclosure of DEI data so that investors as well as employees and potential employees can make better decisions. And the list goes on. Like I said, there's 100 resolutions like this filed this year. And what we've seen for the past 3 years running, it's been maybe 5 years, record numbers of these shareholder resolutions are garnering majority votes of shares voted at company meetings. For comparison, I was involved in this kind of thing, a decade ago. It would have been considered a victory to get even a 10% vote in favor of an ESG related shareholder resolution. So kind of a long way of saying, by putting our investments behind ESG investments, we're making a statement. We're helping make a statement to public companies that we want them to address ESG issues, including those related to racial equity and justice. And this is having a collective impact on companies already today. As we go forward, I think we'll be more focused. Like right now, we're sort of into kind of, I would say, broad-based ESG investments. Will become more focused on specifically the efforts that they're taking around racial equity and justice and DEI issues. The bond portfolio that we've invested in, almost half of that portfolio, about 40%, is focused around impact-oriented projects, that the use of proceeds that the bonds that we buy go for are directly related to affordable housing in low-income communities and small business development and that sort of thing. So those are the kinds of things that you get with an ESG investment over and above a competitive investment return.
Thank you, John. That's great. And we have a lot of thank yous from the crowd, but we have one additional question. What is the process around determining the distribution rate or the annual distribution rate that the board votes on, which you indicated was 4.25%? Does the distribution go fully, hold on, it's moving on me. Does the distribution go fully back to us, i.e. the agency or donor? So if you can speak a little bit about how the board votes on the distribution and how it is processed.
This is Bruce. I can take a stab at the distribution rate. So every year we set a distribution rate for the agencies that are our partners, as well as for donor advised funds. Those are recommendations, and the logic behind it is to retain some of the assets that we're stewards of, so that they can continue to grow and help the organization or the individual in their out years as they continue to serve their mission and focus on their mission. On the donor advice fund side, that's a recommendation. People can certainly distribute more than their 4.25, but the 4.25 is set annually, and it changes somewhat based on interest rates, but it's probably been between 3.5% and 4.5% on an annual basis. Paul also asked about all-in costs. So we negotiated pretty aggressively with US Bank. One of the reasons we use index funds is because of the size and our allocation. It obviously gives us more diversification, but index funds obviously have a lower internal expense ratio than a quote unquote more managed portfolio. So that's one of the ways. So we're probably paying, depending on the index fund, anywhere from 7 to 25 basis points for those funds. US Bank does not work for free, so they charge an overall advisory fee. I'm gonna guess that's probably in the 30 to 40 basis points range. And then for the work that the foundation does, we charge an additional cost, but that's going to depend on the size of the donor's fund or the agency's fund and the services we're providing. So I would say all in, we're probably at 1.25 to maybe 1.5 for all in costs. And if Tony or somebody else wants to correct me on that, feel free.
No, that's about right. And I think another part of in terms of the agency fund, if it's an endowed fund, the 4.25 goes back to the agency, and that's what they have to utilize for operations and however the agency sees fit. So, but no, good job, Bruce.
Thank you. Just one additional question I had directly to me. Is it the 4.25% distribution rate? Are there any factors? What types of factors would you see that would help you to increase that spending rate, maybe towards 5? Would it be investment factors or?
I would say higher interest rates.
Okay. Thank you.
That would be the main thing, and obviously that's based on what Wendell said and kind of what we're seeing, that the expectation is that rates will be increasing in 2022, which that could augur for a higher distribution rate in 2023.
Thanks. Are there any additional questions at this time?
Before people start to ring off, I just and I hand it to Tony for some closing comments, but we can't express enough gratitude and thanks for those of you who are on the call for your partnership and contributions to the community that somehow get distributed through the Community Foundation. I've been on the board only for 3 years, and I've seen a dramatic change in where we're going and what we're trying to do for the community, and not just Oak Park and River Forest, but the surrounding communities within Western Cook County. And we're going to continue on that focus, and would really value your input along the way, obviously, and your support. But clearly there is no Community Foundation but for your efforts and your contributions. And so on behalf of the board and staff, I'd like to just add my thanks.
And Bruce, you said it so well. So you captured everything. And again, I want to express my thanks to each of you for being part of the foundation family. There's so much that we can do together, and know that in the coming months, we're going to be sharing the community needs assessment work along with looking to see how other ways we can work together. So again, on behalf of the foundation and staff, thank you so much for joining us today, and enjoy your day.